Good afternoon and welcome to this week's edition of Halftime Talk. I'm delighted to be joined by an old friend, an old colleague, an old client. We're all overuse of the word old there, perhaps for all of us, but we've been walking alongside each other for many years, and it's a great pleasure to invite Martin Fraenkel, Chairman of the Board of Directors at VAKT Global Limited, back to our table. So welcome, Martin.
Thanks very much, Sean. Pleasure to
Lovely.
be here. I'm glad we're starting on solid facts that we're old.
Yeah, well, from there we depart, nonetheless. It's always a joy, Martin, to have you on early in the new year because we then get the chance to discuss and review your top five predictions for the year ahead, which are now becoming a kind of a reference point for the industry. And so great to have the opportunity to sort of talk through some of them, especially now that we're 2 months into the year and see if your thoughts are adjusting at all. But I'd love to go through them, and maybe we'll wrap up at the end with what is becoming a key factor for the energy markets industry, and that is how technology is increasingly impacting energy trading. But that's kind of our program together. And I wanted to start, Martin, inevitably with your top prediction, or I don't know if you put them in any particular order, but as you listed them at the beginning of the year, outlooks for big themes in 2026. Supply chain security. Tell us a little bit about your thoughts there and why that made it onto your top five list.
Well, I think it's an underestimated issue which is just growing on the agenda, and I think it's very much high on the agenda with policymakers now, which is, as is much commented upon in the media and elsewhere, that the world's dividing somewhat into trading blocks. Sanctions obviously are on the agenda, and so I think that policymakers are worried around how energy security and security more generally is going to be secured in the decades to come. And that comes back to supply chain. I think you and I, Sean, have grown up in an era in which trade barriers were increasingly reduced, and in energy markets, I've always said one of the great trends of the last 3, 4, 5 decades even has been liberalization of those markets, and we're getting some pullback in that. And that means that everyone is thinking much more about, well, in unusual circumstances, and as we know, some of those circumstances can be really pretty unusual these days. Is their secure supply chain going to be secure, and hence will the supply of energy to the domestic populations be secure? And I think that that's a common theme going across oil, the energy transition, gas. It's in all parts of the energy markets.
And in the middle of that, of course, you have what has been the big theme of 2025 in a way, and that is the Trump Liberation Day trade tariffs on much of the world, which kind of had resolved themselves. I mean, not that they had gone away, but sort of everybody had sort of accommodated to the hairy sweater, if you like. And now they've kind of surged back now early in 2026 because, of course, the US Supreme Court has essentially removed one of the key tools that the Trump administration was using for imposing global tariffs, and in those those use of those global weapons and tools that Trump had was about supply chain influencing, forcing the Chinese to release their rare earths in exchange for and so forth. I'm wondering the surprise, shock or not of the Supreme Court decision, how it impacts this outlook for supply chain security, and the fact that it, as you indicate in your comments, it might trump, no pun intended, price efficiency, but this reversal that the Supreme Court has introduced.
Well, I think that the Supreme Court decision, from what I understand from people who follow these things more closely, was expected. I suppose probably the slight surprise was that the minority was three, so it was a 6-3 decision, and many people have felt that the right to taxation was clearly within the ambit of the Congress. So in a sense, it's the surprise is that the minority was as large as it is. But I think the decision was not a surprise. And if you think about it, the market reaction is sort of interesting. That when we had the Liberation Day announcement on April 2nd of last year, that we had very strong reactions across all markets. And now when the announcement comes out, a little bit there's a shrug, right? Stock markets rallied slightly. And actual fact, we don't really know what's going to happen because, as you know, Trump said that he's going to put other tariffs on, but now it's not clear, to what extent those tariffs will go on. So I think that, markets have got used to that there's all these sort of really unclear geopolitical factors which are coming in play, which could have really significant impacts, but quite possibly won't. And I think that's one of the things that markets are struggling with across different parts of the energy markets actually at the moment.
One of the sort of underpin themes of your prediction here, in the sense that the world is breaking down into power blocks, a bit like we saw, and that's the question to you ultimately: is this a repeat of the sort of Cold War framework? The at the time, the Soviet Union versus the West, or versus America. Now we're seeing China versus the US and its associated alignments. Is this another power block, another word for Cold War? Are we in that zone? And how, what's your expectations given this theme for the big summits this year between Trump and Xi Jinping?
Um, Well, I think there are many aspects to that question. The Cold War, from a trade perspective, was actually not bad, right? I mean, the Soviet Union was regarded as a very reliable supplier of energy and other commodities to the West, and indeed other countries throughout the Cold War. So I'm not. Whereas arguably the trading relationships. So I'm just switching off the ping on my phone, which I've left on here.
Please.
The Arguably the disruptions, the political disruptions now are more than we had at times in the Cold War. So I think it's always dangerous to draw direct analogies. Of course, there are some analogies. We are getting more into a world of blocks.
I mean,
And
with us
sadly,
or against us, choose your team kind of blocks.
potentially, I think that that's probably been more of a theme in the US than it has been in China, for example. I don't think China's sort of particularly driving countries to pick a block. I mean, they're obviously influencing countries to align more closely with China. I don't think they're really requiring people to pick a block. I think there's a question mark still as to what extent will the US actually push people to pick a block. But I think the US is clearly pushing the West to be more aware of what it perceives as being security issues in terms of supply chain from China.
Well, let's move on to your second sort of outlook theme for 2026, and it sort of flows from the first. And supply chain security obviously includes oil, and we're seeing now the US curtail the supply of oil out of Venezuela, controlling that spigot, if you like. And now we're in the midst of this buildup around Iran, and the potential for the US to control the oil flow out of Iran. As how does that speak to your second thesis around oil and gas prices, which everybody, including yourself, had forecasted likely to stay weak this year?
Um, My guess is that it probably will make less difference than we think it might, um, which which is a bold prediction. Um, I'm not sure that Venezuela, for example, can really ramp up production very much in the short term. Some of the analysts you were around last week at or the week before last at Energy Week in London, Sean, as well, and I think the consensus was that the oil sector in Venezuela is pretty badly damaged and run down for all sorts of possible reasons. So I think the short term possibility to really ramp up production is small. Um, Iran is probably a slightly different case, but um, and obviously it's uncertain what will happen in Iran, and it could be any day now. And so I'm not going to be rash enough to make a bold prediction there. But generally speaking, I think that what we've seen over the years is that generally supply gets out, right? And there are a lot of vested parties in one way or another, whether legal or not legal, who are interested in supply getting out. So I suspect supply gets out, whatever happens in the course of 2026. Maybe there could be some short-term interruptions, but then it gets
So
out.
you're saying on average your forecast that from the year stands that you were, I think if I'm correct, you had indicated your views that would be in a surplus 3 million barrels a day for 2025 from a supply point of view.
Yeah, I didn't put a number on it, but it certainly
Uh,
seems to me that it looks like there's plenty of supply around, and there's the OPEC Plus is holding supply in reserve. And I suppose if Iran were to withhold supply, that maybe the Saudis or other would pick it up, assuming that they can get supply out. So I think short of really sort of dramatic outcomes in the Straits of Hormuz, in particular, that I suspect that any supply disruption will be short term.
I suppose it could go the other way, right? Like we're seeing in Venezuela, although, as you indicate, additional production capacity out of Venezuela might take some time to rebuild and invest in the infrastructure there. But at least the existing production capacity is now, with sanctions easing, sort of back in the normal global, sort of legal, unsanctioned oil. We could see the same happening in Iran, you would imagine, regardless of how kinetic the face off with Iran and the US ends up being, whether it's big and explosive or whether it's a deal. The other side of that, you would imagine, is some kind of sanctions easing, oil flowing. We could be facing too much supply from sanctions easing, never mind anything else.
Well, I think that's right. I think not only sanctions, but I think in the medium term, investment in the energy sector in both those countries. That if they return more to the mainstream, let's say of global nations, and were unsanctioned, and there was international investment in those sectors over a sort of 2, 3, 4 year period, you can see obviously significantly more oil coming out from both those countries. And if you look at the sort of the big medium term oil and supply or oil and demand situation, that we need to replace supply which gets run down each year. I forget, there's some amazing statistic. Is it 10 million barrels needs to be replaced?
Just to keep.
Yeah, just to keep us where we are. And so oil demand continues to go up in the world, albeit at a slowing pace, but it still goes up. So we're at record levels again. And clearly investment in many parts of the world is a lot more difficult now than it was. So it may be that 3, 4, 5 years down the road, we actually need that sort of supply coming out of Venezuela and Iran. I think that's the point to watch.
So all said and done, you see prices this year averaging closer to 60 than 65?
Yes, I think so. I mean, personally, I think if some of the geopolitical situations ease, that oil prices could go decently lower. and maybe even below those numbers. But that if about the geopolitical issues is obviously a big issue. That
It
is
is
a big if.
the large if.
It's a
Moving
large if.
into number three on your top five list, Martin, the energy transition progress will be mixed. It seems like in the Trump era, and even perhaps before it started a year ago, that the energy transition started to take a bit of a hit from from COP26, I think it was in Glasgow, and then as it came through the Middle East, Egypt and Dubai, and on to it was Kazakhstan, all big energy producing countries. The energy transition sort of started to take a hit against the priority of energy security. Your thoughts of where that goes, and progress will be mixed. Your thoughts, and give us a little bit more insight to that.
Well, I think if you look at the positives on the energy transition, there are some fantastic advances. If you look at the way electric vehicles are now really growing, the sales are growing, obviously in China in particular, but also around the world. If you look at the increased battery capacity and the cost of batteries, which is really transforming, I think. Energy storage around the world. I chair the board of a company, Pexapark, which provides information about renewable energy and power purchase agreements in Europe and the US. And their business has really had a significant pivot because everybody wants to know now about battery and storage, right? So battery energy storage, because that's become such a big part of what's driving these markets. So I think these are really important structural changes which are happening in the energy renewables markets. On the other hand, you have these political pushback, but the political pushback is based on something, and it's based on something which has concerned me for a number of years. In fact, I've brought up in my five commodity themes some years ago, which is that as we have the energy transition, price matters. We have to take the wider populations as a whole along with us on this journey because I think that generally people want to see an energy transition. Most of the surveys always say that populations as a whole want to see an energy transition, but people don't want to pay for it. And the problem is that the cost has gone up in some countries, notably in the UK where I'm sitting. And I think that some of the populist movements have now really politicized this and have got hold of the cost factor. And I think that that's slowing it down, the transition down in some countries. So I think this is going to make things more complicated. And that's why I say that the progress is mixed.
Well, I think, I suppose, in some regards, when you think of the progress of the energy transition, if you were sitting in China, one might think progress is steaming ahead, to use the phrase. We're now, seeing the EVs and the electric vehicles and mobility sort of dominated by electric, and yet the more west you go, and particularly into America, maybe less so. Is this a part of a geographic sort of point of view of the world, and China is literally marching ahead still on this area?
I think China is definitely marching ahead, and China's marching ahead both in terms of the applications in things like electric vehicles in China, also in terms of introducing renewables into its supply system. But because China, of course, is a big net short of domestic energy supply, so there's a big energy security driver in China as well, which is the more renewables you get in China, the less you need to import energy. So all the factors line up positively, if you like, in China to promote renewables to the extent that they can. So I think those factors are real, and I think that. Policymakers in the West also made some mistakes in the early days of the energy transition, including in Europe, right, where some of the goals which were set were just unattainable, and now we're seeing rollback from them.
It's certainly one to where quietly people are putting solar panels on their roofs everywhere, but at the end of the day, the dominant narrative is, BP and Shell, the big oil companies, are retreating from their commitments. So it dominates the headlines. The perception can be worse than the reality. Last year, if my data is right, two out of the $3 trillion spent on energy infrastructure went towards transition, as it is increasingly, as you just mentioned there, and particularly in China, has moved from sort of an optionality to essentially national security, where the transition is, or the power available in renewable energy is domestic and controlled domestically. And so there's a lot to play out there as that energy security issue becomes even more dominant. Taking that into number 4 on your list, Martin, climate adaptation investment will accelerate.
I believe so. I think we're beginning to see some of that. I've always felt that some of the bullish forecasts at how quickly we could transition the global economy were wildly optimistic, and I think that's playing out now that the global economy is transitioning somewhat to renewables, but similarly to other transitions of the energy structure over the last couple of hundred years, it takes time for it to transition. The energy structure is very big around the world, and you can't just click a switch and move over. I remember at the height of the excitement about that the energy transition could be quick. I was sitting with a very senior oil refinery executive, and he took out his mobile phone from his pocket and said, we can move very easily from one phone to another, and who would have ever thought that we would have a mobile phone like this which could do all of these things? 10 or 15 years ago we didn't have that, and so gives us lots of optimism for how quickly we could transition in the energy structure. And it's just a lot more complex to move the energy infrastructure, in my judgment, than it is to change mobile phones. And I think that's playing out. So I think realism is now setting in, and people are realizing that some of the effects of higher temperatures are impacting economies, and we have to do something about that now.
And that's sort of comes to the accepting. We're still sort of striving in the slightly fantasy corridor, it seems to me, that the Paris agreement that's targeting 1.5, we're still living with that's achievable on a sort of policy level, and the reality is clearly screaming that that's not. And the idea that in accepting that it's not, you have to start adapting your infrastructure. You have to start reinforcing physical infrastructure. Are we seeing that penny drop? Of course, places like Holland have been doing it for a long time because of their sort of or geographic location of being a lot of their country below water level. But accepting 1.5 is not going to be achieved. Would you expect that to trigger a lot of spend on infrastructure?
Well, I hope it does, because I think it's becoming increasingly necessary. So a few years ago, when I would say things like this, really well-informed people would say to me, well, you shouldn't say that because it's hard enough to get policymakers to do the things that we need them to do for the energy transition. If we say it's all hopeless anyway, then they're not going to do it. And I've never really agreed with that viewpoint. I think you've got to be brutally realistic about where we are. And I think as we all go around our travels, if you go to communities which are at seafronts or have got big rivers going through them, or in flood areas, or in areas where forest fires are prevalent, you see that local communities are taking those steps, right? Because it impacts directly on
Daily
their way of
life.
life, right? So where people are faced with the consequences now, you can bet that those communities are taking those steps. So I think that that's to do with the with when you can't really kid yourself and it impacts you, people are taking action, and I believe that we need to think about that more on a societal basis. Absolutely.
Number five on your list nearly trumps everything else in terms of its potential scale to disrupt all of the others, and that is AI, the big sort of advancement in 2025, the scale of the energy demand that the sort of massive transformation of AI has. Where do you see that going? The numbers seem sort of eye-watering.
Well, the numbers are eye-watering. I was heard yesterday, happened to be at a breakfast meeting with a big equity investor, and I think he mentioned a number that OpenAI is pledging to invest $200 billion by 2030. Um, and with sort of uncertain business model at this stage about how that's going to be actually monetized. So these are just, we've never seen anything like this in history. Let's be honest about it. But I think that there are a number of areas where it really impacts strongly on the energy world. One of the important pieces, which I mentioned in my podcast, was that the big hyperscalers, which are obviously immensely wealthy companies now, huge companies, they are highly
Microsoft,
incented.
Meta, Google.
Microsoft, Meta, exactly. Google, they're highly incented now to develop their own sources of energy supply because they want to build out data centers in an extraordinary way, and it's key to their business model. So you're seeing really extraordinary things like some of these hyperscalers are contracting for SMR, small modular reactors, which, by the way, I don't think there's yet an existing small modular reactor which is operating around the world. So they're really sort of thinking forward to 5+ years ahead and helping in the development of those types of energy supply. We've seen hyperscalers contracting to reopen existing nuclear plants. So I think a lot of things are going to happen because this investment is really necessary. And these
You're
very
talking
innovative.
essentially about sort of parallel grids, private grids, just to serve the scale of data center demand.
Absolutely, because one of the great constraints in most countries is going to be grid capacity. So I think absolutely that's going to happen. So I think we're going to see this in all sorts of places, and we are seeing it. And within the energy trading world, the big energy traders now have already invested very heavily to develop their own AI tools to be able to make their own internal processes both much more efficient, but also much quicker as well to gain trading advantage and processing advantage. The company that I chair, VAKT, which is providing post-trade services in oil markets, when it was set up 6 or 7 years ago, it was considered innovative because it was on a blockchain. And it's still on a blockchain, but now we pivoted that blockchain, so it's incorporated AI into the processes to be able to give an individualized solution to each and every one of its customers, because it's no longer enough to say, okay, I've got a generic solution for you. So I think we're seeing that in so many different ways because the speed of development and the speed of computing capacity which AI is giving is just is extraordinary. And I think that one really is rolling out faster than we expected.
When you look at that sort of impact of technology, and as we mentioned, the sort of big, massive AI drive and the data center processing power, and then you combine that into the tools that emerge, i.e., how that technology will impact energy trading. And you mentioned there obviously VAKT. How is that, do you think, going to disrupt the physical energy trading world, which of course is still very heavily based on relationships, last mile of connectivity, risk appetite, and then you've got this increasingly AI-driven, automated sort of futures trading structure. Can those two worlds still coexist?
I think they can coexist. I think the question probably is how much will they converge, you know? I think that physical oil markets are, as you say, characterized by the specialist nature or the individual nature of each trade. Excuse me. And you know, automation tends to require homogeneity. So how much? I think we've got an interesting dynamic whereby the technology is to some extent driving markets to become more homogeneous, but the physical markets require that diversity. So I think the question is how much are they going to converge, and that's a big question which I don't think we know the answer of, and but it's an important one. But I think there's no doubt that what will happen in physical markets is that processes, both pre and post trade and trading process, will become increasingly automated. But automation does not mean that people will not be part of that process.
Yeah, it certainly will be interesting space to watch when we look at, obviously, after some incredibly profitable years for the physical energy trading world. Now we see both the sort of transformation, disruption coming from the emergence of the national energy trading companies emerging in our region and driving the independents into asset acquisition, upstream opportunities, buying petrol stations all over the place. And now they've got from the other side the whole disruption of the hedge funds and the automation and AI. And so it'll be very interesting where all that convergence places. But for now, Martin Fraenkel, Chairman of the Board of Directors at VAKT Global, thank you so much for being with us here on the Halftime Talk this week. Really, really great to get your insights and your top 5 outlooks for the year ahead.
Great. Thanks very much, Sean. Nice to see you.